for lithium is demand is deepening and spreading. And so at the highest level, we're seeing this broad electrification shift occurring as the world looks to move from pipes to wires. Now, yes, renewables is supporting that, but it's not just renewables.
Dale Henderson, welcome to The Business.
Thank you, Alicia.
6 months ago, you were announcing a full-year loss and tumbling lithium prices were at play. Now there's been a big turnaround in the results today. Are prices the main driver?
Look, it was one of the main drivers. Yeah, we saw a 40% improvement from the prior half, but it wasn't the only change. Pleasingly, strong production performance, strong sales performance, and a reduction in costs. So all of that played through to the very strong EBITDA that we had at 253 million, and the strong EBITDA margin at sort of circa 40-odd%. So yeah, really happy with the half's results.
It appears the recovery in prices has given you enough confidence to restart the Ngungaju mine in WA, mothballed when prices crashed. How optimistic are you about the outlook?
Look, in the short term, there's a number of very positive indicators. We've had a lot of strong inbound interest, seeking supply. We announced an offtake just last week on very strong terms. So there's those types of points. And then outside of that, well, we're seeing sustained strong pricing. And in terms of demand signals, there's a lot we can see that supports that continued demand, at least in the near term. But of course, beyond that, well, look, we think the long-term drivers for the industry are incredibly positive. And of course, that's why we're a scale producer, and that's why we've set ourselves up to grow with the market in time.
You've recently signed a deal with Chinese battery materials maker Canmax with a price floor of $1,000 a tonne. How significant is that?
As far as we're aware, this is a first of its kind for our industry in terms of the combination of terms, in terms of the price floor that you mentioned, the $100 million US prepay unsecured provided, plus the volume. So this combination's significant. And of course, it speaks to Canmax's confidence around the outlook for the market, but it also speaks to the value they place on PLS as a supplier and the want to secure the supply from PLS. So delighted to have awarded that to Canmax and delighted to be furthering our relationship with them because we've worked with them for quite a few years now.
Recently, US company Albemarle said it was immediately shutting down its processing facility, saying lithium price gains aren't enough to support local processing. Where are you at with your joint venture? And do you see Australia as just a raw spodumene exporter, or could we have processing onshore?
As it relates to the build-out of supply chains to support this growth market being lithium, a lot more downstream needs to be built out. So where will it get built out is the open question. Now today it's been a globally competitive market, so you have to be able to compete on cost. Australia is a higher cost jurisdiction for a number of the cost inputs: power, cost for one, labour, and it's also without a battery ecosystem, and there's some synergies which can arise from that. Now, for these reasons, we were drawn to the joint venture we have with POSCO in South Korea because it has those things. It has a battery ecosystem, battery buyers, battery makers, cathode makers, and of course chemical production through our joint venture plant. So, look, we're optimistic on the future of that joint venture. We'll see how that goes. But bringing it back to Australia, we think the ambition of more onshoring in Australia, we should go for it. The question is, what form should it take? And I think a variant that may well go well is what we call midstream, which is doing some more processing at the mine site to produce a lithium salt, but not taking it all the way to a battery-ready product. And in this regard, we announced today a restructure of our joint venture with Calyx, which is all about building and operating a demonstration plant for midstream on our site. So anyways, we'll see how that goes, but that might be a way in which Australia can participate beyond just shipping the minerals.
In the US, Donald Trump has branded climate change a hoax, dumped signature climate legislation, most recently the Endangerment Act. What does it say to you if the biggest economy is walking away from the renewables transition, given the product you produce is key to that?
Sure. Well, look, as a scale global lithium producer, we're all interested in lithium demand. Now, as it relates to the US, we're actually very positive on what we're seeing. We're seeing large uptake in batteries for data storage and AI. We're seeing adoption of solar more broadly, requiring batteries. And beyond all that, well, we're seeing, particularly from the US, more dialogue around critical mineral security, of which lithium is part of that. You know, batteries are a strategic commodity, and so many countries globally, including the US, are orientating themselves to how do they secure those supply chains, given this is what's required for the future. So, look, I'm very positive about the orientation of the US in this regard, and look, time will tell in terms of what some of these critical mineral security overtures translates to. But as I say, I think PLS is well positioned to explore those opportunities.
So it's happening in spite of US political rhetoric. What's the view like in other markets like China and Europe, where EV production is racing ahead?
Well, I think what we're seeing for lithium is demand is deepening and spreading. And so at the highest level, we're seeing this broad electrification shift occurring as the world looks to move from pipes to wires. Now, yes, renewables is supporting that, but it's not just renewables. But then beyond that, we're seeing this broad-based technology evolution, data centers, AI, and then, of course, there's e-mobility. Now, the fact that e-mobility, for example, can become green is all very well, but that's not necessarily the reason there's the uptake. It's because these are better products, cheaper, more sophisticated. EVs themselves, it's essentially software on wheels these days, and the uptake of those speaks to demand from customers, not necessarily a shift around renewables, albeit that's happening as well.
Well, of course, lithium prices had crashed in the last couple of years and now recovered somewhat. What is the price outlook from here?
Great question. And look, the lithium market pricing has been volatile and it's incredibly hard to predict. But what gives us confidence is the long game. It's this mismatch of very strong demand drivers. Meanwhile, supply is not keeping pace. So we envisage a structural deficit emerges, and that's going to bode really well for producers like PLS who are scale suppliers. So, but between now and then, I think there'll be volatility, but we're set up for that, and we're here for the long game.
PLS has reported cash of about $954 million on the book, and you're back in profit, but investors didn't get a dividend this time. Will they get one soon?
Yeah, so the half we've had is really, I describe it as an inflection point in the market. So it's this return to profitability, but in the scheme of things, a small level of profitability. So in accordance with our capital management framework, that prints not a strong dividend. So it was the view of the board not to issue a dividend for this first half. However, we did flag the positive disposition to a full year dividend, of course contingent on the strong pricing that we're seeing being sustained and the strong cash flow generation that we expect. So if those things happen, well, the board will be in a position to consider a full year dividend at the middle of this calendar year.
Dale Henderson, thank you so much.
Thank you.